Hi, hello friends, welcome everyone to Precision Price Action Pro Trader series. Today I have come to you with a very interesting topic. You all know what is hedging. What is the purpose of hedging? The purpose of hedging is to mitigate your risk. What is a hedge fund? And hedge fund is a fund, a huge corpus fund which has sufficient protection to control abnormal losses. We are discussing about a hedge fund which forgot hedging today. That's the title, the hedge fund without hedging. Please control your emotions because this is a really scary story for you today. Today we are going to discuss about a man who went bankrupt with just a single trade. You guys heard it right. He went bankrupt with just one single trade. This man is one of the best authors of one of the finest options trading book written ever. A very successful trader who managed to earn 40% CAGR in the last 10 years. Thirdly, he was a very successful fund manager with a corpus of $200 million. That is close to about 1,800 crores worth of INR. And this man lost his entire fortune in a bloody single trade. What went wrong? Let's deep dive. He is the man. Do you guys recognize him? He is quite popular in YouTube. His name is James Cordier. He is the author of the best-selling book, The Complete Guide to Option Selling. What it says is how selling options can lead to stellar returns in bull and bear markets. It is one of the best-selling books in Amazon. With 10 years of glory, one fine day, one black swan moment destroyed his fortune, destroyed his client's money, and that too from one single trade. You know who the culprit is? Natural gas. James Cordier, the $1 million fund manager and the author of the guide to option selling, went bankrupt in a single day. You know what went wrong? He had almost 300 clients. Almost 300 clients lost all their money. You know what? Additionally, they got margin call. You know what is margin call? Suppose you have put 25 lakhs in your account. The total loss in your account would be roughly maybe 40 lakhs. Which means you have to pay additional 15 lakhs to the broker to come back to zero, and that's your liability. Next, about 150 million was washed out in a single day. Can you imagine? A fund as big as 200 plus million, out of which more than 75% of the fortune was lost in a single day. How it can happen? Crazy. Natural gas was the commodity. You know what happened? The story is very simple. This man was an option writer. He had 10 years of success by writing options, particularly in commodities. One fine day, he started writing options because option reached a multi-year high. Something like this. I will just show you. Okay, let's come to the story, friends. I'll explain you what happened. Assume this is a yearly chart and this was the lifetime high of the natural gas. What happened? One fine day, always wrote options because he is confident that the price of this commodity, which is natural gas, will not go beyond the lifetime high. What will he do? He will write options. What is writing options? Being bearish. Why? Because he is confident price will come down and it doesn't go up. And he thought of eating option premium. You know what happened? The very next day, price went and it opened with a gap up. So naturally your 5 rupees, 10 rupees options will become 50 rupees, 100 rupees. What will you do? You will panic. What will you do in panic? You will do mistakes. When you do mistakes, what happens? You will be in crisis. This man, when the moment it went high, he wanted to recover his cost. You know what he did? He thought that this price will not come down anymore. The price will not come down anymore. So what he did? He started writing puts, assuming the price is bullish and it will not come down. Unfortunately, the price, it made a multi-year low. It made a 8-year high on a single day and a 15-year low the very next day. I repeat, the price made an 8-year high on a single day and a 15-year low the very next day. You write 5 rupees options, they become 50. To recover that money, you start trading 5 rupees puts also. Immediately what happens? When the price comes down, even those puts will become very high in price. It will go and trigger a margin call and he lost his fortune in a single trade. So tell me, what went wrong with this guy? What went wrong with this guy? He didn't do any kind of hedging, whereas he was running a so-called hedge fund and he never hedged. Correct? That was the fundamental problem. Second, he was extremely leveraged on a single asset, which was a very big problem. And you might wonder how a person of this caliber, who is an author of the best-selling book with 40% compounding over the period of 10 years, ever landed in such a situation. Remember, this situation came to him for the first time in his life. He never had experienced such a scenario. And hence, he didn't know how to face it. However, if he had focused on basics, position size, risk management, risk mitigation, hedging, if he had stuck to any of these basic principles before even taking a trade, before his excess leverage, before his single asset leverage, there was a good chance for him to escape from that crisis. Unfortunately, James Cordier lost all his fortune and he created an apology video to all his investors. In the subsequent videos, I am going to explain pin to pin as to why a person with 10 years of fortune can lose money in a single trade. You might always wonder, right? Come on, he made a lot of money over the period of 10 years. How can he lose money in just 1 or 2 trades? There is a possibility. And for that, answer is lot size. When you start trading, you trade 1 or 2 lots. Over the period of next 10 years, if you are successful, you are no longer trading 5 lots, 10 lots, you are trading 5,000 lots. That is the kind of size you are managing. You can afford to do 100 mistakes in the initial stages of your career because you are learning. Your portfolio is very, very small. Whereas once you reach a matured level, you cannot afford to do those fundamental mistakes. No way. We manage a respectable fund today with close to 10 crores of fund under management. There is no way we deviate from the rule book. There is no way we do any directional extreme risk, no single asset risk, no excess leverage. It's all driven based on risk and position sizing. Risk management, money management, position sizing, betting size, these are the most important things that any trader has to follow irrespective of his achievements. My condolences to all the investors of James Cordier. Even they lost their fortune, and poor guys, they had to answer the margin call, which officially means they have to give more money than what they've already lost. In the next video, I'm going to explain you in micro detail what actually went wrong. Alright, with this we come to the end of the session. Writing OTM options in huge quantity was the root cause for this misery. Alright, so I'll come back to you in the next video to give more details about the overall trade that happened for James Cordier and what kind of situation he went through and what is the current status of all his clients. Alright, thank you very much.
Are you tired of stock market losses? Tired of hundreds of boring indicators and the frequent drawdowns? Do you want to understand how to trade markets without indicators? How institutions cheating the retail traders and how to make fair and consistent trading methods? The answer is IT3T Mega Webinar, India's most comprehensive and 100% money back guarantee training program for stock market investing and trading. And what do you learn from this webinar? Techno fundamental investing, WD GAN techniques, precision price action trading, the option trading strategies, algo trading, and also trading psychologies. So it is a package of 200 world-class investing and trading books jam-packed into the 12 days of webinar. And what you can expect from IT3T: genuine training program with examples and assignments, no indicators, real-life examples, proven and reliable methods. And what you shouldn't be expecting is holy grail formulas, zero loss strategies, 90% win rate stories, get quick rich Ponzi schemes. And we also have students across the globe. The three things IT3T always promises is 100% money back guarantee program, 100% brokerage credit, 100% lifetime learning. But that's not it. We have an early bird offer for you at just 35,000 rupees for first 25 students. So how do you enroll the IT3T program? Simple. Just log on to www.i3t3.in or contact our webinar manager